Mr. Keith here with Money Monday. This is the other account where, let's say you have some money to start with. I'm going to say 50,000 plus in an account, in a Roth, an IRA, just a money market account. I know it's Tuesday. I did not get a chance to film this yesterday, so doing this today. So in this account, what we're looking at, the goal of this account is to use the stocks and money I have already in the account to generate $500 a week cash flow by using options. Hopefully, I'm able to use this money to buy more stocks and I don't have to spend it. You never know what life brings, but I'll have that money there that if expense comes up, I can use it. It's kind of my emergency fund, also. Understand a disclaimer, this is a journey of my account and I share it with you for informational purposes only. I'm not providing legal, accounting, or financial advisory services, and this is not a solicitation or recommendation to buy or sell any stocks or options. Please do your own research, figure out if the stocks I own are stocks you may want to own yourself. You may not like them, you may like them, who knows. Understand that investing involves risk and you can lose a lot of money. All right. And if you want to practice, use a paper trading account, which is what this account's going to be. I tried to use my real account, but it shows my account number on it, so I'm not going to do that. So what I've done is I've gone in and I have put in the stocks, some of the stocks that I own, and I've created the simulated trading account where we're going to do the same trades I did in my live account, and we'll do it in this paper trade account so you can just follow along. All right, so I had 5 stocks today that I played with. First one, same stock we did yesterday, if you followed along in that one, Immunity Bio. In my account, I do own shares of this stock, and my friend Mike said, let's sell some covered calls on it. So that's what we're going to do. So we went out to July, and a covered call, as you may or may not know, is a promise to sell a stock at a certain price if it goes above that price. So we went out to July, about 45 days. That's kind of where I like to go. I like to go between 30 and 60 days. We're looking at the call side here. This is the Thinkorswim platform with Schwab. So just in case you want to get the same program I have. And we were looking at a $9 call right here. So strike price is over here. This is the expiration date. This is when this option will expire. And this is what they're asking in between 40 and 50 bucks per contract. So I'm going to click sell on here. It's going to bring up this order right here. And I sold 2 of those contracts today. So I'm going to change this to 2 down here. So you can see I'm selling 2 Immunity Bio July 17th $9 call, where it says if it's above $9 on July 17th, I will sell the stock to somebody for $9. Going price right now is like $7.15, so that would be a $1.85 profit from right now. Plus, I'm going to get 45 cents per contract. I'm going to go over here. We can go over here and we can analyze this trade. Hopefully. Enter symbol. How come it didn't go over? X. Okay, if we take the stock out, we can see that we are promising to sell it way up here at $9. Now that is outside the probability cone. That's this gray area. If we look at a chart, let me move myself over here. All right, so you got a chart here. This is the probability cone. This is where they're expecting the price could be. Could be anywhere between $4.79, $9.57. So that is above that. So we'll see if it gets to the upper limit there. We may sell a couple hundred shares. So that's that part. All right. Where can I move myself so I'm out of the way here? Maybe down there. All right, so go back to trade. We're going to confirm and send that in. So it tells us here we're getting $90 credit minus $1.30 commissions. They charge per contract at 65 cents. So I will get 88.70. So that got filled right away. That nice little ding tells you got that. I also went on here and I said, well, if it drops down below, because I'm trying to get $100 per stock, so that got us 90, 88 if you want to take out the commission. Usually I won't include commission when I include the prices. Just know that. I said I'll go out here and I'll sell a put, which is what we did yesterday in the account. If it goes below $5, I will buy another 100 shares. So this is the promise to sell. I'm selling a put for IBRX for July 17th, $5 strike. They're going to pay me, and I think I got paid 30 cents when I did this earlier. So we'll put that in and see what happens there. 30 is kind of the high end. We'll see if I get filled on that one. There we go, filled. I got filled at 22. So in my live account, I got filled at 30 cents or $30. This one we got 22. It's a little bit later. The stock may have gone up a little bit since I placed that trade. All right. So there's two trades. So in my live account, that was $120 I brought in just by promising to sell the stock higher and then making a promise to buy the stock if it went lower. So if it dropped all the way below $5, I would buy more. Again, this is a company I don't mind owning. I own several hundred shares, a couple of thousands of shares actually. So getting a little bit more is not a big problem. All right, then I went to XLE, which is the index fund for the energy stocks, your Chevrons, your Mobiles, all those things. And looking at this chart with the gas prices, the way they've been going and everything going on in Iran, who knows what it's going to be, but I believe it's going to stay in a range. So what I did, I just put a put credit spread. I said I want to buy more of this stock if it dropped below, and I'm looking at what I did here, 54. So I said if it dropped below 54, I would buy more of it. But then what I did, so instead of just selling the put right out, I did what's called a put credit spread, which is selling a put at one price, but then buying a put at a lower price to protect myself. Plus, I don't have to have as much money in the account or tied up to make the trade. So if I were to go to make this trade, I would go on July 17th out here. I sold a $54 put right here. And I got paid, I don't know exactly what I got paid for it because I did it as a spread. But I would have to put up $5,400 to be able to sell this. But if I buy a call, and I bought the call at 48 here, if I buy that call, I only have to have $500 in my account, which is the difference between it. So if it drops all the way down to 40, I'm promising to buy it at 54, but then I have the option to sell it at 48. So that protects me from a big drawdown. So what I did up here, instead of single, I went to vertical, and I just clicked on the 53. I did three of these contracts. So I sold the 54. Let me change that to 54. And I bought the 48. And that doesn't seem right. I think I did something 49. 49, sorry. 49, and I got 42 cents earlier, so it looks like we can get a better price right now. So that is a 5-point spread. Let's go and analyze that. So you can see down here, I have limited risk down here. I actually have 1,500. It'd be 1,500, but I'm getting 174. So I'm putting up $1,500. You can see that down here, $1,500 in my account. I need to do these trades. The max I can gain, I'm looking at this right down here. The max I can gain is 174. The most I can lose is 1,326 bucks. So that would XLE would have to drop all the way down below 49. But we'd get out of that trade before that happens, or we'd roll it down. We'd make an adjustment. So again, promising it to buy it at 54. If it comes down, and where's it at right now? 58 right now. So that's pretty close, but it's right there. So I like that trade. Again, this is a stock I wouldn't mind owning. I wouldn't mind owning these shares. So if it does go down there, I would buy some. Okay, confirm and send. We'll see if that goes through. Working 57. Maybe I'll drop that down. I only got 42 out of it, so let's go 54 down here. See if that gets filled. All right, another trade I did is Dutch Brothers. I love my Dutch Brothers. There we go, that got filled. I've played Dutch Brothers for a while now. As it comes down, I buy more. When it goes up, I sell it. So right now it's just hovering in the middle. So I'm going to make a promise. I did an iron condor this one. Oh, we're going to do everything today. All right, so we have sold a call. We have sold a put. We did a put credit spread. Now I'm going to do a put credit spread on this one and a call credit spread. How fun. All right, so the put credit spread means I sold, and let me look what I did here. I sold the 47.50, 42.50 put credit spread. So that's my downside. The upside, I said it wasn't going to go above 75. And this one I'm way outside the probability cone. So I said it's not going to go above 75 right here. I don't think it's going to go up that high. And I don't think it's going to go below the 47.50. If it does, I'd be interested in buying it. You can see that's at the bottom down here. I wouldn't mind owning more shares of it at 47.50. So to do that trade, I'm going to go in here. Instead of vertical this time, I'm going to do iron condor down here. And I'm just going to click on one of these to start with. And I did 2 of these contracts. So you can see I've got the call side and the put side here. So I'm going to change the call side. I sold the call at 75. 75, and I then bought the 80 as protection in case something crazy happens and this thing shoots up to the moon. Okay, now on the put side, that's the downside. I went 47.50 and I went 42.50 as my protection. 62 cents. I got 65 in my live account. And where we're going to go, we're going to analyze this. So on this chart, let's see, pull it up here. You can see the stock is sitting right at 57.89 at the moment. I'm placing a trade saying it's not going to go below 47.50 and not going to go above 75. Okay, so I'm just banking that it's going to stay in this range somewhere. I don't care if it goes up to 68. I don't care if it comes down to 48. It can be anywhere in that range, and we make our money. If I can analyze this, move myself back up here, take out that one, and take out this. I don't own any stock right there. All right, so if we pull this out, we can see this is the bottom side of the iron condor. The most I can make on this trade is 124 bucks. If it goes way down, I could lose $876 on that side. Then if we pull it all the way to this side, you can see on the upside, again, 876. Most I can make, 124. All right. So that's how that's going to go. Make 62 bucks per contract. I did 2 of those to bring in my 100 some bucks I wanted to make for the month. And I'm going to confirm and send that in. So you can see getting a credit of 124 bucks. Our buying effect, we need to have 876 bucks in the account to place this. And we're getting that credit minus the commission fees. All right, so that is filled. All right, so AG. AG, I own 100 shares of this. And in this account, this paper trade account, we bought this a long time ago. We got it like at $5 a share. And now it's up to 20 some. In my real account, I bought it higher and then it's come back down. So now let's go back to AG here. Here we go. AG. There we go. All right. So this paper trade account, like I said, we bought it way back here when it was like $5. I think Mike told me about this one. Wish I would have bought more then. And then I bought it right up here at 27 in my 26 in my live account. And it went up. I did not sell it. I've held it all this time, and now it's sitting at 20 bucks. No big deal. Pays a little bit of a dividend. Got paid that a little bit ago, and I've been selling puts and selling calls on it to bring in more money. It is like an asset that just brings in money. It's like a rental property that has gone down in value. You really don't care about the value of the stock or the rental property as long as that rent comes in each day, each month. All right, so I went out and I sold a $25 call, which is right where I actually bought it at. So if I have to sell it 25 bucks, I break even. So July 17th. Important thing we do look at when I'm selling options, I look when their earnings come out, and I usually want that option to expire before the earnings comes out, because you never know when earnings comes out what's going to happen. It could have a big drop up or big gap up, big drop down. So you can see this earnings, it was at 23, came all the way down to 18, 19 bucks there. So I had a big drop after that earnings. If I go to the last earnings here, you can see they had earnings, had a big swing up. So earnings can affect the stock price. And so usually I want the options to expire before that. So this one I have 717 or 717. So that'll expire before earnings. Probability cone, again, it's between 26 and 15. So I'm placing a option selling a call, a promise to sell it at 25 if it goes below, or if it goes above 25 by September 17th. So I went in here, went to 25, clicked on this, and I got 98 in my live account, so 97 are right there. Confirm and send that. So, oops, there's 10 contracts. It will not let me do that. Make sure you only do as many contracts as you own shares. So I own 100 shares. I can do one contract. One contract represents 100 shares. Remember that. All right. So there we go. This is why you look at it. So I got 97 bucks. Take away their 65-cent commission. I'm not having to put any money up because I own those shares. This is called a covered call. I can cover those shares if they get called away from me. I have them in my account. Max loss, you'll see that says infinity. So if this stock shoots up to infinity, then, I'm still selling it at $25. All right, sold there. And the last one is good old Berkshire. I always say Berkshire, it's Berkshire. Berkshire Hathaway. Okay, love Berkshire. Stock's just been floating right up here. I sold a put credit spread to promise to buy it at $440. Now, I do not have $44,000 in my account to do this, so there's no way I could actually buy the stock. So this is speculative only. This is just an income play. There is no way I would be able to buy that stock if I got put it. So I would have to make an adjustment, or I'd have to buy my contract back at a loss if this actually drops down to where I'd be in trouble. So I sold a 440, 435. So I went outside this probability cone right here. And I went down this way. Usually I do both an iron condor on both sides like we did for the Dutch brothers, but right now I'm going to see if this kind of comes back up first before I do the call side. I'm just going to do the put side because it's kind of at the bottom of this channel here. That is a nice support level. It seems like every time it gets down to 460 something, it bounces back up. So we're going to see if that holds again. So I went in here, hit trade, hit vertical, went down to 440, 435, found that one right there. I got paid 38 cents per contract, and I did 2 of those. So you can see, we'll analyze that trade. You can see right down here, my max risk is 980, but well, I got a share in there. I'd have to take that share out if I unclick on that. There we go. Yeah, I can put me in the corner farther. There we go. All right, so you can see the most I can make on this is 76 bucks. Most I could lose is 924 bucks. Again, if this starts dropping down before the expiration date, we'd roll it out. There's adjustments you can do. You can always buy it back at a loss. So we'll watch that one. There we go. Confirm and send. And we'll monitor up here. We'll see it's working. 38. I got 38 in my account. Hopefully it goes. So there we go. Filled. All right. So everything got filled. Let's add up what we brought in. So we got 38 cents times 2 there. So we'll call it 76. Plus we got one contract with AG. We'll do the 97 there. Plus we did 2 contracts of the Iron Condor and Dutch Brothers, 62 cents a piece. I got 65 in my real account, but we'll go with what we got here. So that's 124. Plus down here we did the XLE. We did 3 of those. We got 54 here in this account. So we'll just say it's $1.50. I got a little less in I got 42 in my account, but we'll go with a $1.50 here. Close enough. There's commission fees and stuff. All right. And then, see, that one got canceled. And then on this one, I got 2 contracts at 45, so that's 90. Plus the 22 we got for that one. So we brought in $559 thereabouts, minus commissions. So you could take 10, 15 bucks, whatever off we had to pay for commissions. But that's what we had to do to make 500 bucks this week. So there you have it. That's another Monday, Tuesday edition, if that makes sense. Hopefully that made sense to you. If anything, you can always send me a question, put it in the comments, and I'll answer it later. Have a good day. Bye.